If you're buying a car, choosing a finance deal can seem complicated. HP or PCP, fixed or flex. It's easy to get confused by the acronyms and options. But when you cut through the jargon, it's actually pretty simple. Let's take a look at the main types of finance agreement. An HP or hire purchase agreement, such as Bank of Scotland Fixed Car Finance, will suit you if you're looking to own a car outright. You can choose to pay a deposit, and then you'll have a series of set monthly payments for an agreed term. After the final payment, you own the car. The key benefit of hire purchase is simplicity. Unlike a PCP agreement, there's no lump sum to pay at the end and no annual mileage limits. Once the agreement ends, you can do what you like with your car. But remember, because there's no final lump sum, the total cost of the car will be spread across the full term of your agreement instead, and that will be reflected in how much you pay each month. PCP agreements like Bank of Scotland Flex Car Finance are the way to go if you want a car for the short term because your circumstances might change or you want to keep your monthly costs down. You can choose to pay a deposit, and then there's a series of set monthly repayments for your chosen term. You also agree to an annual mileage limit. At the end of the agreement, there's a final lump sum to pay. That lump sum is reflected in the size of your monthly payments, so you'll often find you can afford a more expensive car. At the end of the agreement, you'll have two options. You can return the car without making that lump sum payment, or you can make the lump sum payment and then you own the car. If you want, you could sell it, then you could take out a new finance agreement on another car. Because of that final lump sum, the monthly payments will be more manageable. But charges may apply if the car is not in a good condition or has exceeded the mileage you've agreed to. As with a hire purchase agreement, you'll only own the car when you make your final payment. It's the range of options that make PCP agreements appeal to many. Every few years, you could be driving a different car. When choosing between hire purchase and PCP, think how long you want an agreement for and what you can afford to pay each month. If you want to eventually own a car and don't want a final lump sum payment, a hire purchase agreement could suit you best. If you want to change your car regularly, you're confident you can stick to the terms and you're comfortable with your options at the end of the agreement, take a look at PCP. Another tip. Car manufacturers don't automatically offer the best rates. Shop around. If you're a Bank of Scotland personal current account customer, it's quick and free to see what fixed or flex agreements they'll offer you, with no credit checks required. Once you understand the acronyms, car finance isn't that complicated. If you do a few quick sums, then it's pretty easy to work out which finance option suits you best, and then you can get on with the fun stuff. And that's enjoying your car.